Hello, everyone. Welcome to Smart Investing. My name is Albert, and I'm the host of the channel for Smart Investing. I am the owner and director of market research. So, today's video is going to be about the automobile and trucking industry. The last time I provided a video on this sector was about 2 months ago. I can't remember the exact date, but it's been about 2 months ago. Uh, Today was a nice, quiet day, actually. Nice and quiet. On and off work. And just a quick update, just real quick. I won't talk too much, maybe a minute or two. Uh, I will say this: big changes are coming on my end. Wall Street is gonna be insanely surprised. Definitely 2026. Come 2026, I'm in the works of doing some stuff. So sooner or later, Wall Street is gonna be in for a really big surprise. And I was gonna say this: they're not gonna like me, and it is what it is. Whoever knows me, whoever hears about me or knows of me in any which shape, way, or form, um, it's all in competition. I mean, really, I'm one person, pretty much. The crazy thing is for me to say this, and it's actually true. Me on my own, I'm outperforming companies that have hundreds and maybe even thousands of employees. And and the funny thing is, I'm not even doing this full time yet. So imagine if I was doing this full time, like I could literally, you know, put a lot of companies under pressure where either they innovate or they're just going to decline and pretty much start, you know, pretty much going out of business. I hate to say it, but that's just the truth of the matter. That's the way the stock market works. You have your winners and your losers, and then if you're not adapting to your environment and innovating or any which way to further your business into a new generation to improve on, then you're pretty much out of luck. Um, I do see this. I've been in the markets for so many years, but my time is gonna come real soon, and there's gonna be major, major surprises. I'm gonna make a lot of changes that a lot of people do not like on Wall Street. So yeah, that's the big issue. Again, I do respect a few companies and a few people along the way that have done well, that I've seen done well. Uh, the retail investors might disagree with me. They're gonna strongly disagree with me. They're gonna hate me for it, but it is what it is. Um, I've seen the innovation on certain platforms that have helped me to actually even further, uh, even go down the line to even innovate even more. Just with how the technology has been advanced ever since I started. Ever since I've been, you know, having touch screen phones and stuff. So, anyways, technology I use to my advantage. So, obviously, a lot of businesses don't use that. So, again, uh, the way I I don't want to say too much, but I want to use certain words because I don't want people to copy and paste. But the way I run a business is on a tight ship, and then I run it all on my own. So that's all I'll say. So again, thank you guys for watching. We're gonna start this video. I have four stocks for you, and we're gonna start from the bottom all the way to the top, and let's do some research because I've actually read last week that check this out, and I didn't even know this that I think it's only about 16% of people in the US actually do stock market research. So you mean to tell me 84% of people are not doing their stock market research? Like, if you are doing your research or you're trying to or you're listening, like it's crazy how I just find it crazy how easy it is to do and people don't do it, but then the amount of time people spend on looking for the right information or the right person or the right feedback, it's just either not there or uh, people are listening to very inaccurate information. It's just mind-boggling. So to hear 14% on stock research that's being done, either by individuals or by companies, and I'm talking about Wall Street. So I find that very odd, extremely, extremely odd. Uh, that source of information was actually posted from T Rowe. T Rowe, that's a big name. It's not, an unknown company. They're a big name. So for them to come out with that kind of information, that's huge on my end. Huge advantage. Uh, with that alone, just the simplistic information, just like that mind-boggling, like that, where uh, those margins and spreads are like so low, where I see an advantage on my end. Wall Street is gonna get screwed. I'm sorry to say, but there's a lot of companies that shouldn't be in business that are in business that, yeah, that need to go away. Really, I hate to say it, but it's true. It's like, people just uh, earn money just to throw it away. So, anyways, it is what it is. Let's start with the four stocks that I have. So we're gonna go over fundamentals, uh, basic quants, and basic technicals. I'm not gonna go over it like I usually do, like a few years back. Just very very simple. We're gonna see if this is a stock to be okay, or see if it's good or bad. That's what we're here to show you. Uh, Again, I'm one of the where. Hold on one second. So I always say this, along with the way I'm showing you this research as of right now, um, sooner or later, this is going to be closed for a subscription paying model. Uh, I'm glad people don't look at my longer videos anyway, because a lot of people, they should be watching longer videos instead of shorts. You can't learn much from shorts. They just want the quick feedback and that's it, which is fine, but you're not really learning anything. So, whoever's watching my longer videos, more power to you. Uh, you're gonna become a smart investor. That's the whole point of my channel. So, uh, we're changing ways as to, well, I'm changing ways as to how people look at investing. So let's start from what we usually do. I'm just trying to set up my information. It's been a little while since I have shared some insight and done this. Okay, so now I'm ready. So ticker symbol EVTV. Volumes at 69K. Very low volume. Market cap 6.37. Going down the list. I do not like what I see. I don't even have a PE. 52-week high and low. Difference of what? 25. No dividend yields. We're looking at the chart. So far, it looks pretty bad. Pretty bad, pretty bad. Envirotech Vehicles Inc. Let's look at the last 5 years. So in 2022, obviously, you went from 2 to 60. It broke down on around March 13th, 2023. Then it went up. You see it's bouncing around, but for the most part, look at that huge decline. That huge decline. Uh, And then we have like a triple top for the last, what, 2 years at least. And then it finally, what was the low? What was the low from that thus far? So from 2024. So the low was around nine. Let's say nine. Sorry, let's say 1180. Let's say 1180. So then it broke that in January. So basically, a year later, it broke the low from the 2024. It broke that. I would say. I mean, this one here is not really a triple top because it hasn't reached that peak. But I mean, almost. I mean, you could say a double top, triple top. I would say a triple top. It's close enough. So then you had that bottom there. It had the double bottom versus the triple top, and it finally broke down. So there you go. It made way for the new lows. Let's look at the last month. So they did a split, reverse split on August 8th, 2025. Actually, that was a few days ago. So with splits, they tend to go up for a little while. But again, this kind of interest for stockholders and shareholders and uh, just people interested in this stock, it doesn't look like it. Did not pick up on volume. I don't see no price action. Not enough anyways, because I mean, you could have some volume, and then as soon as it's consecutively going up, but just at a faster rate, at least one of those days within a 2 week period, then uh, that will give some momentum. But so far, it needs time to see if it has momentum. It's only been a few days since the split, but again, in that industry for the marketing for the vehicles, people don't want to buy vehicles in the end of the summer. I mean, maybe the beginning. We're getting close to like the colder months, so doesn't seem like a hot topic. Even if it is, I mean, we'll see. But I don't think people are interested in cars as much as they should be at the moment. We have other major news going on than worrying about cars. So let's look at the technicals. Pretty much bearish. It has no info really for the quants. That's just basic. I could go into it more, but that's all I have for you. The overall rating was like pretty trashy. The only thing it gave me was value. Obviously, cheap stock, but other than that, not showing me much. Envirotech vehicles. So far, this stock is not a good stock. We're going to move on to the next one. Next one we have is ECDA, Automotive Design. Look at this chart, awful chart. We went from, the stock went from around, let's say $11 down to $1.23, and then come 2024, basically it stood flat and then slightly going down. So you could say up until April, then it started to go slightly down, penny by penny, really, penny by penny, since 2024. And then you could kind of see these periods here, up and down, up and down, up and down. And then 2024, it kind of went down and then went up again, but then it started to break down again. And then ever since around March of this year, it went down. A lot of stocks did go down, but it followed that continuation pattern to go down. So you could clearly see it reported earnings around that time. And then obviously from the hit that it took in early March, dragged down till the next month, also in April when it reported earnings. Obviously, Wall Street doesn't like penny stocks or low volume and low market cap stocks. So it's almost a given. It's almost a given. Wall Street doesn't really care about these underrated companies, which are so many. I mean, this is so stupid of Wall Street. Sorry to say, but that's the truth. Very complacent. So here I am looking at these uh, underlooked stocks, underappreciated, underrated, underlooked. So, anyways, it broke down. Now it's down to 15 cents. It only gained 6%. So, volume's actually pretty high for a stock like that. I didn't mean to screenshot that. That was by accident. So, yes, you can clearly see right there. And then it broke down in, what is this, July? Broke down, what date is this? So, in July. Wow, so it just broke down even more. So, anyways, bad fundamentals. I do not like what I see. Uh, the last stock, I didn't even look at the earnings per share. I mean, it had negative earnings anyway. Like I said, I didn't like what I see, so it wasn't even worth looking at the indicators for the fundamentals. Uh, Earnings are negative, everything negative. So, but aside from that, I'm trying to see something that you guys don't see if it has any potential. That's um the news. So they've gotten even more into debt, but are they raising money? They're growing their revenue. Obviously, that's good to see, but they have a lot of work to do. I'm not even gonna look at their cash flow and everything. Let's see. No major news for this stock. So the last thing they had was design got approved from key proposals at a meeting. Oh, I meant to underline that. I didn't mean to put like arrows. I don't know why it yeah. No, that's not what I want to do. There we go. Okay. So they approved proposals at a meeting. That's not something major. So for this stock, we're gonna say no as well. And it's only 15 cents. This company looks like a company that's almost gonna get delisted. Two more stocks. Next one up, MKDW. So 20-cent stock. Volume pretty awful. Market cap pretty awful. Earnings. All these numbers here. Everything here. Awful. All this here. Awful. This is not even worthy of looking at. It's really nothing over there on the right side. Uh, the chart you can clearly see right there. Then it broke down. It was a fake, and then it went up. But then this is the real one. Is it gonna break that or go under that? So you can clearly see around January of this year, it started to break down slightly, and then boom, it just broke down off of that low from December of 2024, and then it just went low from there. And this is where we're at now, around 20 cents. So for this stock and this company, no quant ratings, obviously not even $1 for this stock. I don't even think the fundamentals are even worth looking at. Uh, their debt loads, I mean, I don't. It says it's the 16%, so the debt loads are pretty low. It's not really showing me much for their income statement. Balance sheet has picked up. Let me see. So in 2024, wow, they did awful in their balance sheet. Awful. I don't know what happened, but in 2024, they screwed up big time. Really screwed up big time. So, anyways, the stock, another horrible stock. Uh, it sucks to say that, some of these companies could have had potential. I mean, just in general in the market, but it doesn't look like it for this one. So far, all these companies are horrible. Last one up, we're gonna go LOBO, Lobo. So Lobo EV Technologies. Screen looks horrible. The charting. We have here 52-week high and low. So a low of 35 cents, a high of 3.5. Two earnings are not bad. I've seen worse. Market cap at 8 million, 8.2. Let's look at the 5-year chart. That was a down. That was a down chart as well. So the highest ever for this stock was only. You mean to tell me not even $5? So yeah, uh, this company has a lot of work to do. Moving on from that, uh, what about the? It's not showing me much. So return on assets, ROE, they've actually done worse. Shh, go to bed. They actually done worse for 2024, which is a pretty bad year for them. And overall, it was an okay year for a lot of stocks. Other than that, other than that, uh, income statement, revenue, yeah, they went down. They went from almost $1 million positive in 2023 to almost 900,000 negative in 2024. It's almost like they spent the money they earned from last year, they spent it all the year after. Like, that's not how you run a business. Uh, it's pretty outrageous, really. Really outrageous. So, I could be wrong, but that's just what it looks like. It could have been a different way how they've done it, but, numbers don't lie. The numbers do not lie. So, cash flow, we have negative 2.94. 4.6. So they do have some cash, which is fine, but still, I get it. I mean, to use the money you earn and to use it next year or next year, I mean, I get it. But then what was it? What year was that? For 2024, 2025. But anyways, now you're stuck at zero. You're back to square one, really. So now it's like you're not in the negative or you're not in the positive, but then you gotta start using money wisely. So they're doing okay, but the stock is just not even uh, doing nothing. I mean, investors are not even interested in the stock at all. Um, I wouldn't say it has potential, but they're not the worst and certainly not the best. Uh, this is a company just based off of the numbers and the charting. Uh, it needs a few more years. It needs a few more years to really uh, get its act together. I don't know if they might have the same management 5 to 7 years from now, but also other than that, they need to keep obviously good talent, but other than that, they need to, invite some interest into stakeholders or investors. Somebody that needs to, push this stock up a little bit because you could clearly see, uh, not just 1 year. We're talking about a few years. So at least 2 years within declines, and I guess that's what sucks about the market. You can have all this capital for your company raised from banks and other supporters, but in the open market, public markets, it's like you have all these asset managers, you have all these other companies that are gonna, you know, cheer on your downfall. Pretty much, they want to cheer on your downfall and push shorts. I mean, it's kind of crazy to do for like 2 years straight. Um, for a stock that's barely worth $5. Like, why would you short a company that you can't even really make money off of? Like, I just don't get it. I don't get it. I don't get it. And I'll be damned if if the owner sided with the same people and bet down on his own company. That's if he created it, or if they had new owners. If they bet down on their own company, I wonder if that's even possible. If an owner can negatively view his company and bet down on his own company to make money, so that way, when they earn it, they can put back into it and push the price up, and then actually buy back shares or make shares go up again, and then push the stock up. Uh, Crazy, crazy insight to do that, but who knows? I don't know if that's allowed. So, anyways, again, LOBO, it needs a lot of work. Let's just leave it at that. Needs a lot of work. So I'll leave it blank. So there you have it. 3 stocks that are bad and one is just okay. So I'm just gonna put needs work. And then this one no, this one no, and then this one no. And that's all I have for you. Sorry I spoke a lot. I just wanted to get some information out there. So that's all I have for you guys. Thank you guys for watching. I will see you guys in the next one. And hopefully, I will make a next one tomorrow. Thanks again. Good night.